They call him the Oracle of Omaha. Warren Buffett, one of the richest people in the world, yet also one of the simplest in lifestyle and smartest with his money. It's easy to look at his immense wealth and think it's out of reach, but the principles he follows are surprisingly straightforward. So how exactly does he manage his billions? What's the blueprint behind his financial mindset? Today, we're going to break down the lessons from the master himself, showing you how you can apply his wisdom to your own financial journey. First and foremost, Buffett values time over timing the market. He's famous for saying, the stock market is a device for transferring money from the active to the patient. This is a powerful idea. While so many people are frantically trying to predict the next market move, buying on a hot tip and selling in a panic, Buffett does the opposite. He doesn't chase trends or try to time the market's peaks and valleys. Instead, he focuses on the long-term value of the businesses he invests in. He's not buying stocks for a few days or weeks. He's buying great companies to hold for decades. The lesson here is profound: be patient. True wealth creation, especially through investing, isn't a sprint, it's a marathon. The magic of compounding, where your returns start generating their own returns, only truly reveals its power over long stretches of time. It's a force that works best when left undisturbed. Rushing in and out of positions, chasing get-rich-quick schemes, or reacting to every bit of market noise is often a recipe for disaster. The real money is made by waiting, by letting your investments in solid companies grow and mature. So take a deep breath and learn to play the long game. The second pillar of Buffett's philosophy is something that seems almost contradictory to his immense wealth. He lives well below his means. We're talking about a man with a net worth of over $100 billion. He could buy any house, any car, any luxury item he desires. Yet he still lives in the same house in Omaha, Nebraska. Why? Because Buffett understands a fundamental truth. Wealth is not defined by what you spend, but by what you keep and grow. When your income increases, the natural temptation is to upgrade your lifestyle. This is known as lifestyle inflation. A bigger house, a fancier car, more expensive vacations. But every dollar spent on a depreciating asset or a fleeting experience is a dollar that can't be invested to work for you. By keeping his expenses low, Buffett ensures he has a massive surplus to invest. The lesson for us is to focus on value, not vanity. Build a life that's fulfilling but frugal, and you'll free up capital that can be put to work, building your own financial fortress. It's not about depriving yourself, but about making conscious choices and prioritizing long-term freedom over short-term gratification. Third on our list is a crucial mindset shift. Buffett buys businesses, not stocks. When you hear stock market, you might picture blinking numbers and graphs on a screen. But for Buffett, those symbols are just representations of something far more real, a living, breathing business. He doesn't see himself as a stock trader hopping in and out of ticker symbols. He sees himself as a business owner. Before he invests a single dollar, he does his homework. He invests in companies he can understand, like Coca-Cola, Apple, or American Express, because he has a deep conviction in their business models, their management, and their long-term competitive advantages. He's not speculating on a price chart. He is making a calculated decision to become a part owner of a company he believes will be more valuable in the future. The lesson is powerful. Think like an owner, not a speculator. Before you invest, study the company. What does it do? How does it make money? Does it have a durable competitive advantage? Do you believe it will still be a strong, profitable company in 10, 20, or even 30 years? When you adopt this owner's mindset, you're less likely to be swayed by short-term market volatility. You're investing in the fundamental value of the business itself, which is the true source of long-term returns. The fourth principle is something that seems counterintuitive to many investors. Buffett loves to keep a large stash of cash. Berkshire Hathaway, his company, almost always has billions of dollars sitting on the sidelines, ready to be deployed. While others might feel the pressure to be fully invested at all times, fearing they're missing out, Buffett sees cash as a strategic asset. It represents opportunity. He famously advises to be fearful when others are greedy, and greedy when others are fearful. When does this cash become most valuable? during market crashes and economic downturns. When panic fills the streets and everyone else is selling in a frenzy, that's when Buffett goes shopping. With his war chest of cash, he can buy excellent businesses at huge discounts. He's not afraid of the chaos. He's prepared for it. For us, the lesson is twofold. First, build an emergency fund. This protects you from having to sell your investments at the worst possible time to cover an unexpected expense. Second, maintain some liquidity to take advantage of market downturns. Opportunities favor the prepared, and having cash ready when assets go on sale is one of the biggest advantages an investor can have. Next, and perhaps the most important principle of all, is that Buffett invests in himself first. He once stated, "The best investment you can make is an investment in yourself." The more you learn, the more you'll earn. This isn't just a catchy phrase. It's how he lives his life. Even in his 90s, he reportedly spends 5 to 6 hours a day reading. He reads annual reports, books, newspapers, anything that can expand his knowledge about businesses, markets, and human behavior. He understands that knowledge is the ultimate form of capital. It compounds faster than money and can never be taken away from you. The lesson is clear. Self-education is the highest return investment you can ever make. Read daily. Take courses. Develop skills that increase your earning power and make you more valuable in the marketplace. Your mind is your greatest asset, and the time you spend sharpening it will pay dividends for the rest of your life. Financial success doesn't start with picking the right stock. It starts with building the right knowledge and mindset. Protect and nurture your mind, and the rest will follow. Finally, let's talk about his time horizon. Warren Buffett thinks in decades, not days. This is a concept that's hard to grasp in our instant gratification world, but it's the absolute key to his success. Consider this incredible fact. Over 90% of Warren Buffett's entire net worth was accumulated after he turned 60 years old. How is that possible? The answer is the relentless, unstoppable power of compound interest. His strategy has been remarkably simple and consistent. Stay invested in great businesses and let time do the heavy lifting. He's not looking for a quick win next quarter. He's looking at where a company will be in 10, 20, or 50 years. This long-term perspective allows him to ignore the daily noise and avoid emotional decisions, which are the enemy of any investor. He doesn't sell when the market dips or get euphoric when it soars. He sticks to his plan. The lesson for us is to never underestimate the power of slow, steady growth. It might not be exciting, but it's how real, lasting wealth is built. Focus on long-term compounding, stay consistent with your saving and investing, and let time work its magic for you. So to recap, Warren Buffett's secret isn't some complex algorithm or insider information. It's not about luck. It's a combination of discipline, patience, a frugal mindset, a commitment to lifelong learning, and an unwavering long-term perspective. These aren't secrets reserved for billionaires. They are timeless principles that anyone can start applying today. Follow these principles, and you won't just manage your money, you'll begin to master it. Thank you so much for watching. If you found this breakdown of Buffett's wisdom valuable, please give this video a thumbs up and subscribe to Finance Theory for more billionaire money lessons on building wealth and mastering your finank. Your mindset. Let us know in the comments which one of Buffett's principles resonated with you the most. See you in the next video.